How strong is the U.S. economy? Data today suggests, hey, maybe, just maybe, better than the weather is letting on. Barry Knapp is the head of equity strategy at Barclays Capital. And we're also joined by our own economics editor, Mike McKee. All right, Barry, consumer spending is showing some signs of strength here despite all this bad weather. What's going on? Are people still shopping despite the cold?
Well, I think when you step back and you think about what was supposed to be the main driver of stronger growth in 2014, it was a dissipation of the negative impact of higher taxes, which really took a bite out of consumer spending in the second and third quarter of last year, and the fact that the consumer has made so much progress in balance sheet deleveraging, and we're actually starting to see expansion in things like credit cards and even mortgage credit now. So I think the underlying story for the consumer isn't bad. The problem from an equity perspective is those consumer discretionary stocks got decidedly expensive by the end of last year as the market had fully bought into that idea.
Okay, yippee. So people are spending more money on credit, taking out more loans. Right. But hey, that's good, right? Right? Mike?
Well, the glass is half empty and half full in this case, because we did see at the same time as we got a big increase, 0.4 increase in personal spending in January, we saw December's revised down from 0.4 to 0.1. The reason that it went up so much in January was an increase in services spending, away from durable goods into services, and what goes into services? Your utility bills. So we spent a lot more paying for things that we have to pay for. At least we spent the money, but it wasn't unalloyed good news. It's not like we're all running out
bills. Is this just to keep us all
motorcycles warm? Like Matt.
What do you think? I mean, okay, so I bought a new truck last week. What do you think about car sales in general, though? Because they were weaker than the market estimated in February. They were weaker than the market anticipated in January. And the car companies seem to think they can make this back, that those purchases were just deferred until next month or the following.
They have a reasonable argument for that. And I'll let Barry jump in just a second.
Sure.
And just say that if you're going to buy a big-ticket item like that, you're probably going to buy it. And maybe you don't want to go out when the weather is terrible and you'll go out later on. That's what the car companies are counting on.
Yeah, Barry, I've been making the point all along that my concern is, you've got bad weather for a few months. At some point, a lot of those purchases, they're just not going to be replaced. You can talk about pent-up demand all you want, but there's certain things that you might have had the opportunity to do that you're just not going to go back and do. So you didn't go out to dinner last Friday night because it was too cold. That restaurant isn't going to necessarily get that money back from you. Yeah, you might go out in the future, but there was an opportunity that was missed. And yet, you look at these consumer spending numbers today, Barry. So, where do we come out in all this? Is weather, in fact, an issue?
Right, so those are a bunch of really fair points all in there. What I would add, Trish, and to Matt's point, is that auto credit bottomed in 2010. So we had the best part of the recovery in auto sales back in 11, 12, and even last year. So we're at the point where auto sales have sort of leveled off. From here, if we're going to get a further boost in the cyclical parts of the economy, it has to come through housing. And I'm not talking about just house prices going up. I'm talking about actually loosening the mortgage credit channel and starting to get first-time home buyers back into the market. But even more broadly, what we thought would be the most investable, most durable trend, not just this year, but through the cycle, would be a revival in capital spending. We've underinvested in our capital stock for 10-plus years other than the energy sector, and that's where we thought the lifting of all that public policy uncertainty related to all the government issues we've had in the last 3 years, that would be the main driver, and that would be a much more investable concept than trying to pick spots to buy consumer-oriented companies.
Well, we got a problem there, too, as well. We did see very good news on the Purchasing Managers Index today. It went up a point more than people thought. Gave us some hope that maybe there was weather involvement and it's going to rebound a little bit. But what you saw is the expiration of a lot of R&D tax credits at the end of last year. Congress did not renew those. That pulled forward a lot of that business spending that Barry is talking about. We saw big increases in November and December. We've seen almost nothing in January and February so far. What we don't know is whether we're going to start to see that build again, whether there was a temporal time shift distortion.
Barry, you think that's inevitable, right?
No, what I would say to that, though, in response to what Mike said, is that there was some evidence of that, but more importantly, the core capital goods part of the durable goods report last week showed a big pickup in January, actually. And we had an industrials conference the prior week, and we got lots of positive anecdotes from these big industrial companies that they're much more interested in capital spending and even mergers and acquisitions than they are in simply buying back stock. So I think we've gotten to an important stage in the recovery.
Well, that's
that'll
an important
create
point.
a lot
I mean,
of positive
look,
spill-on
you know, you
effects.
look at 2013, and all we saw was buyback after buyback after buyback, and no CEO really seemed to be willing to make that capital investment in either equipment or people, for that matter.
Right.
If we can change that, will certainly change a lot for this economy. You know, Barry shared with us some anecdotal evidence. What are you seeing in terms of the numbers? Is there an improvement? I believe the most recent report did show some improvement.
Did show some improvement. The question is, does that continue? It wasn't huge, but on a rolling basis, it was a major change from what we'd seen earlier. So we hope that that continues going forward. The big question is, do we see that as the weather warms up? Maybe there's a hint in the ISM report today that we're going to see that. What'll be really interesting to see, you know, we're going to have a Fed meeting in a couple weeks. So the week before that, we get the Beige Book, the anecdotal reports from around the country, and we'll see what businesses are saying about their capital spending plans and about how the weather affected them.